Tech stocks and the technology sector are all the rage right now. Whenever you check out the financial news or fire up YouTube, all you see is euphoria about the Nasdaq as it hits an all-time high, driven by index-smashing returns from the likes of Apple, Facebook, Tesla, Amazon, and so on. The problem is, these are all US stocks.
Although UK investors are not limited to the UK market, it is always a good idea to pick stocks that you thoroughly understand. And that may include having a preference to UK stocks. After all, you are likely to be more familiar with your home country's politics, trends, and macroeconomic factors.
This is where we might encounter a problem though. We've been led to believe that the UK doesn't have many tech stocks. The FTSE 100 is practically a barren wasteland when it comes to tech, with just a handful to choose from and no tech giants. But if we dive deeper into smaller companies, there are a total of 224 listed tech companies in the UK according to Stockopedia. There's plenty of choice, and small companies is where we can unearth some gems.
As a UK channel, we feel it is only right to showcase some exciting tech companies on our own shores. So in this video, we'll be introducing you to what we consider to be 4 of the best UK tech stocks. Let's check it out. Welcome to Unshackled.com, the investing and finance channel that sets you and your finances free.
I'm Andy and that was Ben, and if you like what we say, hit the like button and click subscribe. Is a tech company a tech company? Sometimes you have to wonder how certain companies are categorised. Personally, we think that some companies are labelled too loosely as a tech company because it sounds cool, and the fact that it might contribute to a higher share price. Tech companies tend to have a valuation premium because they're tech.
In our view, a tech company is a company which makes the majority of its revenue from selling technology. The key point is that the tech needs to be the product. They need to sell the tech. The use of advanced technology to deliver its product does not on its own justify it to be classified as a tech stock in our opinion.
For example, Netflix is considered a tech stock, but why? All they do is create and sell video content, which is of course facilitated by their technology. But back in the day, we wouldn't have thought of Blockbuster as a tech stock.
Likewise, Disney, who is a direct competitor with Netflix, isn't considered a tech stock. Good companies have always utilised technology to gain a competitive advantage, and we see this as more important than ever. With all this being said, we will be looking at UK tech stocks that we consider to actually be tech stocks.
Number 1, Sage Group. Sage Group has a market cap of £8.2 billion and is the UK's largest tech stock. The shares currently trade at 761 pence. They provide business software and solutions with a focus on accounting software that helps businesses manage their business, including invoicing, expense management, compliance, and tax. All this sounds incredibly boring and is bringing back horrible memories of the days when I was shackled to my employer's desk as an accountant.
Nevertheless, this stuff is vital for running a business, and the Sage software is too cheap to be a target of a company's cost cutters. Businesses often worry about other aspects of their business and tend to ignore the boring stuff. This gives Sage a reliable income stream, as demonstrated by its strong revenue growth over the past few years.
We love software at Money Unshackled because once the software is created, it can be sold to more and more customers with few incremental costs. The beautiful thing about accounting software, I cannot believe I just said that, is that companies hate training their staff, so tend to stick to software that everyone already knows. This gives Sage a huge advantage because they already dominate that space.
The next thing that we love about software, and in this case Sage's business, is that software companies have somehow duped their customers to pay them a recurring revenue stream. Where once you would pay an initial outlay up front and could use the software for years, most software is now paid for on a monthly basis. As a result, the customer ends up paying far more, but hopefully in return receives a better service. All good points in Sage's favour.
Number 2, GB Group. GB Group is a £1.5 billion AIM-listed company that specialises in identity management. Their shares currently trade at 769 pence. Its customers include a broad range of blue-chip organisations such as HSBC, IBM and Nike. They offer a series of solutions that help organisations quickly validate and verify the identity and location of their customers.
This is a high-growth industry, as identity theft and fraud is an ever-growing problem around the world, which this company helps to tackle. Their identity proofing division provides ID verification, ID employee and comply services, and ID fraud and risk management services.
They provide various business solutions that are focused on informing decisions about customers or employees in areas such as employing people, registering identities, verifying identities, fighting fraud, and locating people.
While past performance is not a reason in itself to buy a share, you have to be impressed with this performance. It has gone from around 25 pence a share in 2010 to 770 pence today. That's an annual compound return of 41%, totaling an almost 3,000% return over 10 years. Incredible.
Number 3, Keyword Studios. Another stock that we think has lots of potential is Keyword Studios. Probably not a video game company that you have heard of, but don't let that put you off. Its market cap is £1.62 billion and the shares trade at 2,200 pence. They are a leading international technical services provider to the global video games industry with 59 studios in over 40 cities across 21 different countries worldwide. Clients include Nintendo, Google, Microsoft, Sega and Warner Brothers, among many others.
The key services it provides include art creation, game development, audio, functionality testing and localization. We're really impressed with how diverse their offering is, with revenue well spread across each of its service lines. Not only are they achieving excellent organic growth across their existing business, but they are pursuing acquisitions.
We can see from their cash flow statement that they've been making significant business acquisitions every year, financed by excellent positive operating cash flows.
They believe, and we see no reason to doubt this, that there is clear opportunity for Keywords to build on its existing relationships with many of the major games companies by extending its services offering and geographical footprint to create an integrated global video game services platform. This ability to cross-sell should enable them to continue to grow earnings for years to come.
Their acquisition program may even include taking their core technical expertise into new adjacent markets such as e-learning, film dubbing and subtitle services, online gambling and other markets. We love an ambitious and hungry company. Success breeds success.
One potential downside is that the shares are quite expensive, with a forward-looking PE ratio of around 45. But the gaming industry is continuing to grow, leaving Keywords primed to take advantage. Their revenue growth has been outstanding, having gone from €37.3 million in 2014 to €326.5 million in 2019. Earnings per share growth has been similarly impressive, going from 7 cents per share to 19 cents in the same period. Both these metrics are expected to grow further still. The reason these numbers are listed in euros is because the company is headquartered in Ireland, but it is listed on the London Stock Exchange in the UK.
Number 4, Computer Centre. Computer Centre is a leading independent provider of IT infrastructure services. Its market cap is £2.3 billion and the shares currently trade at 2,022 pence. They advise organisations on IT strategy, implement the most appropriate technology, optimise performance and manage customers' infrastructures. Some of their IT solutions include network, data centre, workplace solutions, user productivity, service desk, security and many other things like this.
Basically, if a company wants to improve its business through the use of technology, it can get in touch with Computer Centre. We think Computer Centre are well positioned to take advantage of businesses' growing needs for technical IT support. The pace of innovation is frightening and businesses cannot survive, let alone thrive, without top-notch IT.
Revenue growth has been superb, going from about £3 billion in 2015 to £5 billion in 2019. Moreover, earnings per share has grown from 49.6 pence in 2015 to 103.7 pence in 2019.
What to do with these stocks? We've shared with you these 4 UK tech stocks as a place to start your research. They're not meant as stock tips. Add these 4 stocks to your watch list to possibly buy in the future. But don't necessarily rush out to buy them today. You need to do your research first. We've deliberately not gone through the financials in any detail, as each stock could be a video in itself. But if you wanted to research them further, a great resource is Stockopedia, which we use ourselves to analyse stocks.
You can try it for free for 14 days when you use our offer link, and we've also negotiated a massive 25% discount on the first year of any annual plan for those of you who want to stay. You'll find this offer, along with many others, on the moneyunshackled.com's offers page, linked in the description below.
Question of the day: what are your thoughts on UK tech stocks? Do you have a favourite? Let us know in the comments below.
Thanks for watching. On this channel we talk a lot about personal finance, investing and all things money. And if you want to see more great content, please click the subscribe button below.
This is moneyunshackled.com. See you next time.